Warner Bros. Discovery, a name synonymous with cinematic magic and iconic storytelling, stands as a towering figure in the world of entertainment. Founded in 1923 by the visionary Warner Brothers, Harry, Albert, Sam, and Jack, this studio has enchanted audiences for over a century with its rich portfolio of films and beloved characters. From the dawn of talkies with The Jazz Singer to the modern streaming age, Warner Bros. Discovery has been at the forefront of media innovation and cultural impact. However, this storied legacy now faces a daunting challenge. Despite its historic achievements and cultural contributions, Warner Bros. Discovery is confronting a serious financial crisis. The company's total debt has soared to approximately $42 billion, placing it in a precarious position that raises concerns about its future stability. The weight of this massive debt, compounded by evolving market dynamics and fierce competition in the streaming wars, has cast a shadow over what has been a beacon of creativity and entertainment excellence. This financial strain could potentially push the company towards bankruptcy, an alarming prospect for fans and industry as a whole. Furthermore, Warner Bros. Discovery's current struggle underscores a broader issue affecting many traditional media companies like Paramount, Starz, and other traditional media and cable companies. With debt levels this high, the company's ability to sustain its operations and continue its legacy of innovation is in jeopardy. The possibility of bankruptcy for such an iconic studio not only highlights the severity of its financial troubles, but also marks a potential turning point in the evolution of the media and entertainment industry. Now, before going any further, please hit like and subscribe button to help the channel out. With that out of the way, let's dive into the rise and the financial struggles of Warner Bros. Discovery. The story of Warner Bros. Began in 1923 when four enterprising brothers, Harry, Albert, Samuel, and Jack Warner, banded together to make their mark on the film industry. Initially diving into film distribution, they quickly realized the potential of creating their own studio. Their first big innovation came with the introduction of synchronized sound through the Vitaphone system, a breakthrough that transformed the silent film era into the vibrant age of talkies. Warner Bros. Wasted no time in capitalizing on its pioneering spirit. The studio's release of The Jazz Singer in 1927 marked the arrival of the first major talkie, a milestone that reshaped cinema. This was followed by the timeless classic Casablanca in 1942, solidifying Warner Bros.' reputation as a powerhouse in the film industry. Over the decades, Warner Bros. Has navigated through various economic storms, from the Great Depression to the impacts of World War II. The studio faced challenges as trends shifted, such as the decline of 3D films, but consistently demonstrated resilience and adaptability, finding new ways to thrive in a changing industry landscape. As decades passed by, the company is now facing significant financial issues. The 2022 merger with Discovery Incorporated brought about a hefty debt load and necessitated major restructuring efforts. These financial hurdles have posed considerable challenges as the company works to stabilize and strategize for the future. From its groundbreaking beginnings to its current financial trials, Warner Bros. Discovery's journey reflects a history of innovation and adaptation, even as it faces complex modern-day challenges. Following its merger with Discovery Incorporated, Warner Bros. Discovery inherited an enormous debt burden exceeding $50 billion. In response, the company has been focused on managing this financial strain through a series of strategic measures, including cost-cutting initiatives, asset divestitures, and realignments within its operations. The company's approach to content has been a double-edged sword. High-profile cancellations, such as the much-discussed Batgirl movie, have sparked public outcry and impacted Warner Bros. Discovery's reputation. There are ongoing concerns about how these decisions affect diverse representation and the broader industry landscape. For the first quarter of 2024, Warner Bros. Discovery reported a net loss of $966 million, or 40 cents per share. This marked an improvement from the previous year's loss of $1.07 billion, or 44 cents per share. Adjusted earnings, EBITDA, fell by approximately 20% to $2.1 billion, reflecting weaker performance in some areas, including lower revenue from the Suicide Squad, Kill the Justice League video game. And in terms of competition, Netflix leads the streaming industry both in subscriber numbers and customer satisfaction. According to Forbes Home, 36% of streaming users prefer Netflix, far more than any other service. Netflix has grown by investing heavily, cutting costs, and introducing new features like a cheaper, ad-supported plan and stricter password sharing rules, which have boosted its profits. Moreover, Disney Plus is a strong competitor with a vast content library, including Disney, Hulu, and ESPN+. Though it's newer than Netflix, Disney aims to reach 230 million subscribers by the end of 2024. To manage costs, Disney has started licensing more of its content to Netflix and has raised its prices to improve profitability. Amazon Prime Video is the second largest streaming service by subscribers, largely because it's included with Amazon Prime memberships. Amazon raised its Prime membership price from $119 to $139 in 2023. On a more positive note, the company added 2 million direct-to-consumer streaming subscribers, bringing its total to 99.6 million. This segment achieved adjusted earnings of $86 million, an increase of $36 million compared to the previous year. In an effort to enhance its market position, Warner Bros. Discovery announced a new bundling strategy that will combine its streaming services, Max, Disney+, and Hulu, into a single offering this summer. Though pricing details are yet to be disclosed, the move aims to attract consumers with a discount, mirroring traditional pay TV packages. Currently, in the competitive streaming market, Warner Bros. Discovery's Max service stands at 95.1 million subscribers. Netflix leads the pack with 247.2 million users, thanks to its robust content library and strong customer satisfaction. Disney Plus follows with 150 million subscribers, bolstered by its diverse content portfolio. Amazon Prime Video, with 200 million subscribers, benefits from its bundling with other Amazon services. Recently,
the NBA announcing the $75+ billion TV rights deal with ESPN, Amazon, and our parent company, NBC. Now, Warner Bros. Discovery suing over that agreement. How does this deal transform the future of sports streaming?
the NBA turned down Warner Bros. Discovery's offer to match Amazon Prime Video's $1.8 billion annual bid for broadcasting NBA games. Instead, the NBA has signed a new long-term deal with Amazon, which adds to their existing agreements with NBC Universal and Disney, totaling a massive $77 billion. In response, the company has pushed back, arguing that their offer should have been accepted according to their current contracts. They've hinted at taking legal action, which could lead to a courtroom showdown with the NBA. As of March 2024, Warner Bros. Discovery is grappling with a hefty debt of $42.57 billion, which raises serious concerns about the company's financial health. To tackle this, there's buzz that CEO David Zaslav might consider splitting the company. The idea would be to separate Warner Bros. Discovery's profitable studio and streaming assets, like Warner Bros. Pictures, DC, HBO, and Max, from its struggling cable channels, such as TNT, TBS, and CNN. This split could help maximize the value of the more successful parts while giving the cable networks a chance to address their own issues. A potential split of Warner Bros. Discovery could make managing its debt more complicated, especially for the basic cable channels. There's worry about how these channels would manage their share of the debt if they were spun off separately. This strategy is reminiscent of Lionsgate's split, which separated its studio business from Starz. While splitting can sometimes reveal hidden value, it often meets resistance from creditors and stakeholders. Analysts, including Lightshed's Rich Greenfield, have labeled the idea as potentially risky and nonsensical, suggesting it might not be the best solution for Warner Bros. Discovery's financial challenges. Who knows how they'll handle the situation? All I can hope for is for this historic media company to survive through these challenges, so all of us can still continue enjoying our favorite shows. With that, let's end the video. This is Visionomics, signing out.